Let me tell you the secret that has led to my goal. My strength lies in my tenacity. Louis Pasteur. My friends, tenacity, of course, means persistence. And Louis Pasteur, who is famous the world over for all of his work in science, in helping lead to a number of discoveries dealing with the issue of pasteurization, germs, all sorts of things. And he tells us from back in time going forward the importance of persistence. We talk about it every day here. Of course, 10 to 15 minutes a day, that is all we ask. And what does our persistence lead us to today? Well, of course, success in our gold trade. And again, guys, we appreciate all of your feedback. One thing that I had not noticed is the figure I had set in here originally for the profit. I actually had it posted too high. We set a 2-to-1 risk to reward ratio. Well, 1.44 times 2 is 2.88, 2.89, and I had it set too high. We had basically 1, 2, 3 different times we would have hit our point. Once it's reset, it knocked us out in the morning on Wednesday, and we hit our price point again in gold, shorting gold, a 2.89% success. We actually would have knocked that out all the way back on the 13th if I would have had it set right. And again, what do? The minute that you enter into a trade, of course, you set your profit band. Hopefully you've set that at the right amount. I did not. We got awfully close to what I had set, but not quite hit it. Of course, when it's reset, we hit it in the morning. And another successful play. This one, down play in gold. And we've been talking about this over the last few days. Where is gold now? Still at that negative 15. Popped up just a little bit in the afternoon after reaching that low and kicking us out successfully in the morning. Ended the day up 0.05%, but still at a negative 15 on the success multiplier formula. And, gold hasn't taken off yet. I can't wait for it to do so. But again, just wanted to alert you to another successful trade that we have had. This one, a short one on gold. So let's go now. As we typically start, we're going to take a look at the S&P 500. We have a little special practice trade going here. I looked back in time, did a little backtracking, and noticed how accurate down moves were. And again, you can sort of look at the minimum percentages and then how successful some of these trades were. We're going back in time, 2 of these trades. You can see we had a successful 3.42% trade, and then this prior trade going down in the S&P, 5.06%. We went ahead and initiated a trade early. We haven't had the STC go red yet. Again, an experiment, doesn't cost us anything to do it. We set an acceptable loss of 3.34%. Of course, those you have taken the always successful formula, you know what you do. You reduce your standard trading amount by that percent so that you thereby reduce the effect of the volatility. Again, I encourage you. In fact, I'll put at the end of today's training, I'm going to put that always successful formula training so that you understand what we're talking about when we say these things. I hope that you guys are taking all these trainings as we put them out, because they're going to help you understand fully what we're doing and why. Big rollover today in stocks yet again after 1, 2, 3 days of up movement. S&P down 3.04%. Still hanging on tenaciously. The STC hasn't rotated yet, but you guys know we're negative 14. That is, the weekly is down. That is 10 points. And the 2-day is down. That is 4 points. So again, lots and lots of downward pressure on the market, and this big rollover today is something to pay attention to. We'll see if it continues and how well this practice trade works. Again, doesn't cost you anything to do a practice trade when you're using real money. Of course, when I use real money, I'm going to be very careful with things that I have practiced, I have fractionally traded, and I know just what I'm getting into. And again, I'm just adjusting my trade amount based upon the kind of volatility that I'm facing. What's going on with the NASDAQ 100? It was down even more, almost 5%, 4.91%. Did the same thing here, jumping into a practice trade to see what we could do, hoping for an 8.82% gain. Again, limiting our loss based upon what? Based upon the average true range, and then using that loss percentage to reduce the size of our standard trade so we can deal with the volatility. That's the best and easiest way to deal with it, is you reduce the size of your trade so you don't get crushed if volatility goes against you. Now, it does reduce the potential of your gains, and again, depending on your skill set, what kind of skills you have in a particular stock or ETF, you may push those risk ratios. You can reduce or you can actually increase your risk ratios. You can by increasing what? Your dollar amount that you put in. And if you do that, again, that's going to be based on your own experimentation, doing practice trades. We're not a stock calling service. We're an education firm. We're not talking about you using real money here. We're talking about you practicing to show yourself approved. Victory after victory after victory before you ever think of using any real money. Otherwise, you don't have the skill set and all you're doing is gambling. And I can assure you that the market will take it from you. I have been doing this for many years, and if you don't have the skill set, and even when you do, the market tries to get you overconfident so it can hammer you down. I will tell you one thing about being a trader is it keeps you humble. And when you start getting arrogant, it will humble you in some way that you never see coming. That is why you talk to any people who've traded on the market for a while, they will tell you about making sure you know what you're doing, you're crossing your T's, you're dotting your I's, you're doing things the right way. And that's, again, another reason I encourage you, after you've been practice trading for a while, to start fractionally trading. It holds you accountable, makes you honest, shows you what you're doing with real dollar amounts, albeit very small amounts, keeps you honest, keeps you faithful. Okay, let's move away. And again, we're still at a negative 14 also on the NASDAQ 100. Let's look at what's going on 20-year bonds. They popped up for the day, 2.13%, still waiting for them to roll over, going down in the red. Why? Because we're at a negative 14. We are quite negative. You see that we're well below the 200 EMA on the half-day chart. We're well below the 200 EMA. There, I can find it if I spread the price out enough. We're well below it on even the 2-day and even on the weekly. We are well below that 200 EMA. So things are quite negative in bonds. That's why we're waiting for that rollover to jump back into shorting bonds. Remember, when we short bonds, we look at what? We look at TBF, Tango Bravo Foxtrot. That is the single short of the Treasury Bond ETF TLT. And again, encourage you, if you don't have the options training experience that we offer, Patreon members get that for free at any of the 3 levels. Encourage you to become a Patreon supporter. Take that 3-part series, Option Made Simple, the Charting Wealth Way. If you don't have that skill set, then you can, of course, use these inverse funds, such as TBF on 20-year bonds, PSQ on the NASDAQ 100, and SH on the S&P 500. We've already talked about our successful short position that ended this morning in gold, down 2.89%. What's going on with Bitcoin? Oh, man. Bitcoin down for the day, 2.62%. Bitcoin just can't get any love. Still very negative. Negative 15 on the success multiplier formula. We, of course, had that successful 13.61% short trade recently in Bitcoin. Could have done a whole lot more. And again, encourage you to think out of the box. What could you do when you see nothing but strong red down candles with no wicks on the top? You could stay in. You could just take your money and run, be happy with 13.61%, or you could sell half your position and let the rest of it ride until you get a green candle. You could have done any of those things. Nothing wrong with any of it as long as you're practice trading it, you're learning, you're noting it in your trader's journal, and that can be nothing but a little notebook that you keep on each of the ETFs, the stocks that you trade. And as you practice trade, you learn, you make those notes, you note it down, and you remember it. What really sucks is learning the same lesson 2 or 3 times. You don't need to get your head caved in to learn something. When you learn it, write it down, commit it to your notebook, commit yourself to reviewing that notebook and learning from it. So again, thing to know from Bitcoin and where these cryptocurrencies are, they're still a hammering down. We're waiting for them to turn around, and when they do, we'll be here ready to jump in them and ride them up. That's where we are, folks. As we end the day here midweek on Wednesday, going into Thursday, God bless. All the best from the whole team at Charting Wealth World Headquarters.